based off what I saw at the conference. This is day one of what will ultimately be a multi-decade process of Bitcoin being integrated at the highest levels of global finance. You only have a few key players doing this now. We're at the beginning of a trend that is going to be hugely exploding over the next couple of years. One of the announcements today really caught my eye, and that was Strive announcing that it is purchasing Semler Scientific.
Is this the starting gun to consolidation in the industry? Are we going to see a bunch of M&A activities or transactions in this space?
I think you see the BlackRocks of the world, the Fidelities of the world, and others look to acquire one of these companies. This really is the start of something much bigger. I won't name names, but this is something that was discussed at the Treasury Conference and was validated.
Archie.
What were your big takeouts from the Bitcoin Treasury Unconference?
Takeout number one is that this is day one of a multi-decade, century, if not centuries long trend. Pierre Rochard talks about this speculative attack. He wrote about it all the way back in 2014, this idea of borrowing in low rate US dollars, borrowing in a lower yielding currency in order to buy a higher yielding one. This is something that has been used, globally for several decades now. The most popular carry trade has been the yen carry trade, borrowing in yen and investing in US dollar assets. That's been hugely profitable for investors. And now Wall Street is only just coming around to this idea, this reality that it's highly profitable to borrow in US dollars at a very, very low rate and invest it in a higher yielding currency, invest it in a higher yielding asset, that being Bitcoin. We're really just at day one of this process. Strategy was the very first one to pave the way. You see Stride making a great deal of announcements today. They announced they were buying Semler Scientific in an all stock transaction. That's huge from an M&A perspective. So I think that, my biggest takeaway was the general level of enthusiasm and incitement and very detailed and nuanced conversations about the way that this industry was unfolding. Look, I think, back in the 40s at the Bretton Woods conference, that was the emergence of US dollar dominance. That was the emergence of a US dollar denominated global capital market network, and everything that you've seen built since then, as far as finance goes, has been atop of US dollar rails. I think this is just day one based off what I saw at the conference, and I spoke right after Saylor, so not a tough act to follow at all. But is really that this is our Bretton Woods, right? This is the Bretton Woods for Bitcoin, the day one of what will ultimately be a multi-decade process of Bitcoin being integrated at the highest levels of global finance and becoming the rails atop which the majority of it is underwritten. I wrote about this way back in 2022. One of the first pieces that I wrote when I was brought onto the Bitcoin layer right out of my junior year of college, I wrote about this idea of a Bitcoin native yield curve. At the time, I was talking about the Lightning Network as a medium to do that. The piece was called Time Value of Lightning Network. It was a sequel to Nick Bottia's Time Value of Bitcoin that he published way back in 2017, I believe, or 2018. And at the time, I was convicted in the belief that these types of instruments, these yield-bearing instruments, would be entirely native to Bitcoin. The way that we've seen these instruments emerge is actually within traditional finance. And that's why I bring up this idea of a Trojan horse. Instead of these things happening on a Bitcoin native basis first, they are happening within the confines of traditional finance. Strategy creating these preferred stocks, Strive, building this, assembling this team in order to create a suite of financial instruments to do the exact same thing, to speculatively attack the dollar and buy Bitcoin with it, the success of Metaplanet. You only have a few key players doing this now, but what I witnessed was the fact that we're at the beginning of a trend that is going to be hugely exploding over the next couple of years in terms of its popularity. There will be players who fail. There will be people who don't do this correctly or are just purely in the space as opportunists who want to make a quick buck and then leave. But that's really what I learned, that this is our Bretton Woods moment. And I think that Bitcoin native yield curve of different financial instruments solely atop the Bitcoin network, I think that is still a future, for the world. I do believe that it's 10, 20, 30, 40, 50 years out before we see, that fully kind of consume the US dollar in terms of its usage as an asset class in global capital market rails. I think the first iteration of how we see this is what we're seeing now with Bitcoin treasury companies creating these Bitcoin adjacent financial vehicles. So it's really validating to see that idea on full display just 3 years after I had written that piece. So my biggest takeaway is that really we're in so many words, Archie, we're really just getting started. And we talk about the institutionalization of Bitcoin, Bitcoin's monetization process. A lot of the detractors will look at what's happening here and they'll say everyone's a shill, everyone's a suit coiner is the term that they've dubbed. But in actuality, in order for Bitcoin to grow from a $2 trillion asset to where it is now to a $100 trillion asset, you need companies like Strategy in order to bring Bitcoin exposure to corners of the market that is currently mandated away from it at this point in time. 97% of institutional capital is mandated to equities and credit. And so if there aren't companies who are creating financial vehicles for people in these markets to gain Bitcoin exposure, Bitcoin will never get from here to there. I still believe in the grassroots idea of everyone choosing to adopt Bitcoin on a personal level. But that is a very effortful campaign with very low yield, right? That takes a very long time. And it's going to continue to take several decades before the majority of the American populace invests in Bitcoin in their own right. And it's a mainstay in their 401k. The way that we get there faster, the way that we accelerate this process is bringing Bitcoin to the very institutions who've been detractors of it in a vehicle that they understand. And that will accelerate Bitcoin's monetization. And that's exactly what we're seeing right now. So that's what I would say to the detractors. This was an inevitability and we're seeing it unfold in real time. And rather than fighting what's happening, I think understanding the risks associated with it and embracing it is a much more fruitful endeavor than simply rejecting this wholesale.
Well, there's going to be money made in the financialization of Bitcoin. Why shouldn't Bitcoiners make some of that money too? Because there's a point of view that your entire financial allocation, your investment allocation should be to Bitcoin and Bitcoin only, and anything else is kind of not halal, it's not kosher. And I'm like, why? Where did that view come from? I don't really understand. I mean, if your personal circumstances dictate you have a greater appetite for 5% or 10% or 15% of your net worth, what's wrong with participating in the Bitcoin economy and helping that financialization of Bitcoin?
For sure. So there was a piece written now over 10 years ago, actually. And for everyone who hasn't read it, I encourage you to go to the Nakamoto Institute, nakamotoinstitute.org and read it. It's called Everyone's a Scammer by Michael Goldstein, September 11th, 2014. And it's funny, the suggested background reading music is from one of the Clint Eastwood movies where he was a cowboy, one of the three in the Dollars trilogy. I can't remember which one it was, but go and read that piece. It's essentially about how everyone will be trying to make money off of you. Everyone will try to convince you that this is the next Bitcoin. Everyone's out to get you. The only thing that you can do is buy and hold Bitcoin. And I completely agree with that. But by the same token, plenty of people have taken that as a religious belief, and anything that seems not kosher, to use your words, they outright reject instead of trying to understand it. And this is kind of the honey badger Bitcoin maximalist, right, if you will. I'm a Bitcoin maximalist. I think that the reason there is so much vitriol toward the Bitcoin treasury companies is because they're thinking that all of these things are scams. They're a way for Bitcoiners to make a quick buck. I would argue that the reason you see Bitcoin podcasters, for example, right, this whole meme of podcaster to corporate executive pipeline, is because for the better part of the last decade, last 15 years, 16 years since Bitcoin has had a market price, these Bitcoin podcasters and people who've been working in the Bitcoin space and researching it and researching capital markets right alongside it understand this asset and its utility and where it's going more deeply than any traditional financial player in the world. And so that's why you're seeing these Bitcoiners take these positions at companies. It's not because they want to make a quick buck. It's because they understand Bitcoin more deeply than anybody else, and they can help this world come to fruition, right? And so that's why you see them putting on a suit and joining these companies who are listed on the NASDAQ. It's to bring this future into fruition faster. It's not to make a quick buck, right? That's what I would say. It's not so much they're being opportunists. It's the fact that they are uniquely positioned to help this world come to fruition, to structure these vehicles in such a way that they are to work right alongside those capital markets teams who know how to structure these vehicles with a really deep understanding of Bitcoin. So that's what I would say there. It's not so much that these Bitcoiners are being opportunists by joining these boards. It's that they're uniquely positioned to understand Bitcoin as an asset and help the capital markets team structure these vehicles and bring them to market.
Was there anything that surprised you coming out of the Unconference?
The general level of enthusiasm and also lack of shilling, right? People weren't there to say, to try to sell their treasury company over another. You mentioned Michael Saylor. I was watching his talk. I was in the front row. He talked about Metaplanet, and he essentially said that, he wakes up every single day knowing he's got to work his tail off. Otherwise, Dylan and Simon are going to cook something up and run circles around him. There's a high degree of respect among these different institutions. And the conversations weren't so much like, hey, here's what we're doing and here's why it's better than yours. It was actually really, really fruitful dialogue between every single person there for the advancement of Bitcoin as an asset and the transformative power of Bitcoin as an asset. And everybody was doing their part. Everybody was recognizing the other folks in the room. People weren't vitriolic towards one another or saying that they were better than each other. It was a really fruitful dialogue about the advancement of Bitcoin and the advancement of humanity. And that's something I semi-expected, but the degree to which people were having extremely open dialogues and, they were companies that were operating in the exact same jurisdiction really surprised me and really gave me even more conviction in this space that these folks are united in a common goal. They're different companies, but they're united in a common goal. And competition is a good thing, right? Michael Saylor directly speaking about Metaplanet and saying that it's one of the things that inspires him to work so hard. That's a good thing. Because it drives every single person working in this space to offer a better product, to offer a better solution for investors that bridges the worlds of Bitcoin and traditional finance more effectively. That's the thing I'll say that really surprised me the most and gave me conviction in this. I think any Bitcoin treasury company detractor that would have gone to this conference, it may have changed their mind. If not at the margin, maybe entirely. Because if you had gone to the conference and spoken to these people and shaken their hands, you'd understand that everyone is united in a common goal, and that is bridging Bitcoin and traditional finance. Everyone here, everyone there was a Bitcoiner, right? They weren't an opportunist who had a very limited understanding of Bitcoin, who were trying to make a quick buck. They really understood the value proposition of Bitcoin as an asset class and were willing to work with each other and bounce ideas off of each other in order to help us get from where we are now to where we're going to be, which is Bitcoin as a $100 trillion plus asset that consumes a lot of this capital from other areas of the market. So yeah, I would say willingness to work with one another, bounce ideas off of each other, and the unification under a common goal were the things that really surprised me the most out of the Treasuries conference last week.
I think Michael can take a lot of the credit for that. He won't take the credit for it, but he should take the credit for it, for setting that tone amongst all of those companies, actually. And when I spoke to Eric Semler in Prague, he was kind enough to come in and have a chat with me in our makeshift studio. He said he was he reached out to Michael. They had no pre-existing relationship, and he was overawed by Michael's generosity and warmth in literally sharing the playbook with him. I mean, you don't see that too often in the corporate world, where you have some kind of alpha and you're like, hey, here it is, guys. It's just let me know if you've got any questions, and supporting them, and even using his own social media presence to promote them. Every time there's an announcement from one of these treasury companies, you see Michael retweeting that. It's quite extraordinary to see. Well, it's good that they've got a fantastic spirit of cooperation. I guess the next steps is the evolution of these companies. Mm-hmm. We briefly touched on the need at some point to commercialize, financialize their business models, and do you have any inkling of where that's going to go? I know we spoke about real estate, but anything else that sort of popped onto your radar?
Yeah, so one of the announcements today really caught my eye, and that was Strive announcing that it is purchasing Semler Scientific. And the idea behind this is to create a more efficient Bitcoin accumulation machine. That's what they've said. And so essentially, if you take a look at Matt Cole's announcement, ultimately what they want to do is make everything they do accretive to Bitcoin per share. Semler Scientific has, as far as I know, a profitable underlying diagnostics business. And that is, over a long time horizon, accretive to Bitcoin per share. That's the name of the game here. That's why investors love these companies. And so whether it's through acquisition or using outside capital to create these companies, whatever is more efficient, capital efficient, these companies will do. And so, I talked about real estate. I'm harping on it quite a lot because I think it is the biggest opportunity for a Bitcoin treasury company to come in and kind of bridge these two worlds and siphon that capital away from real estate and into Bitcoin because it's such a huge market. But there are thousands of other industries that have hugely profitable businesses where a Bitcoin treasury could come in and acquire it and then use the cash flows to make it hugely accretive to Bitcoin per share. Ultimately what we've seen is the deflationary power of technology over the last couple of years, making companies that used to have that were hugely capital inefficient, more and more capital efficient as time goes on. And so the strategic acquisition of businesses or the strategic creation of underlying businesses that are low capex and highly profitable for the purposes of increasing Bitcoin per share, whatever industry you're in, right? In Semler Scientific's case, it's medical diagnosis, is a huge net positive. We're seeing it there. I'd have to imagine that other companies behind the scenes are doing the same thing. And hats off to Strive, hats off to Matt Cole and Jeff and the entire team over there. They're very forward thinking in terms of the way that this industry is headed, and they have a deep understanding and recognition that having a core business and being able to flip those cash flows into Bitcoin can be done at the exact same time that you are leveraging access to capital markets to increase Bitcoin per share. So that's going to be a fascinating case study 10 years from now, 20 years from now. I hope to be a professor at a university where I'm giving a lecture on that. And, I'm teaching about Bitcoin and structured finance. I hope to be speaking about them and many others. But they are, in my mind, the first example of a company who's working to execute on this idea. And I have no doubt in my mind that we're going to see many more over the coming months and years ahead.
Do you think that's the starting gun for consolidation in this sector? Because it does appear to me that scale does matter when it comes to financing and access to financing as well, size of your balance sheet. And I do wonder, is this the starting gun to consolidation in the industry? Are we going to see a bunch of M&A activities or transactions in this space?
I have a feeling so. Yeah, I have a feeling so. In the same way that, highly profitable banks work to acquire other banks, I think the exact same thing will happen with Bitcoin treasury companies. We just saw the first major example of it. They announced their intention to buy Semler. I think that's going to happen more and more, right? So whether it is a currently private Bitcoin company that gets acquired by one of these treasury companies, or whether it is just a normal company that a Bitcoin treasury company views as integral in the strategic process of scaling their Bitcoin strategy operations. This really is the start of something much bigger. You can kind of looking at banks would be the best example of the way that these things will unfold. You start with a high amount of regional banks, and then from there, the highly profitable regional banks purchase all of the other regional banks and become national banks, and then eventually multinational banks. So I think that exact same process is underway now for Bitcoin treasury companies, and Strive is the first example of that. So to answer your question, I do believe this is the starting gun, and I think that ultimately is good for Bitcoin, right? What you want is a couple of major players who are out to make themselves the most efficient Bitcoin accumulation engine out there. You have Strategy, you now have Strive, you have Metaplanet over in Japan. The more people who attempt these things and put out a valiant effort and are profitable, and then these Bitcoin companies acquiring them, I think that's hugely important, and I think it's great because you're consolidating the amount of talent that you have as well. A lot of these companies' success, it boils down to their operators, and we'll see that over even more in the coming years. Who outperforms who? It comes down to your operators. And so strategic mergers and acquisitions allow you to consolidate your operators and make a more fully fledged team that can execute on this strategy more. In my mind, I think having a team of 20 really, really great operators all under one roof working to execute this strategy is better than having all of those 20 operators scattered to the winds and doing different things. It allows you to achieve scale much more effectively, and that's the name of the game with these treasury companies. So I think we're going to see a lot more of that.
So given that scale is major impetus to raising more and more capital and be able to compete in this space, and we are in the accumulation phase, how long before a major fund manager...
Whoopsies.
You want to check on that? You want to?
Yeah. No worries. We can continue.
No.
You can, if you want to ask that question again.
No, we're not going to edit this. This is hilarious.
Oh, beautiful.
So how long before a major fund manager, something like one of the Blackstones, BlackRocks, whatever, launches their own Bitcoin Treasury company because their access to capital markets is unrivaled, and they're often the ones selling the products, right? So, would there be any particular angle that would appeal to them?
I think, and for those watching at home wondering why that just happened in the background, this is a new office with fresh paint. So, and those are held up with command strips.
Command strips.
That's why the Bitcoin sign fell. I hope you don't take that as a bad omen for Bitcoin watching at home. But in my mind, the way that this actually plays out is instead of building an in-house team for this, they just acquire one of these other Bitcoin treasury companies. But they have to do it before they achieve massive scale, right? Strategy right now, I believe their market cap is still well over $100 billion. They are a massive, massive company. I could be wrong there, but they're a huge company.
It's in the ballpark. I think it's in the 90 to 105, 10.
Now.
Yeah.
So ultimately, for these major institutional players, it's still kind of a footnote, right? The BlackRocks of the world, the Fidelities of the world. But there has to be some internal rumblings and some internal discussions about potentially they're weighing the opportunity cost of building this firm in-house themselves and how long it will take them to achieve their ends, right? Increasing Bitcoin per share more profitably than others versus or more quickly than others versus just acquiring one of these other companies outright. I think you see the latter. I think you see the BlackRocks of the world, the Fidelities of the world, and others look to acquire one of these companies before they build an in-house team themselves. And that's purely because, again, the market has kind of voted that really all it wants at this point, I think, as I said, that will merge into also desiring a highly profitable underlying business. All it wants at this point is a team who is solely dedicated on increasing Bitcoin per share. And, having that under one roof, under one ticker. I think that if BlackRock, if Fidelity were to build out that team themselves, then that would not be a conflict of interest necessarily, but I think the market wouldn't like that too much because their team isn't dedicated to doing that. They're not operators whose foundation is that, but rather they have other goals, right? They're an asset manager. They create different financial vehicles. They sell them to, retail investors and institutional investors and other shops and things like that. I think the path of least resistance for one of these asset managers that's sitting on a lot of capital is to just acquire one of these other firms. And so, you kind of imagine it as, you have sharks and you have killer whales, you have sharks, you have shrimp, etc. Relative to the BlackRocks and Fidelity of the world, Bitcoin treasury companies currently are shrimp. They are very, very small and they're easy to acquire. And so I think over the next 12 to 18 months, one of these big firms may be acquired by BlackRock, Fidelity, and others, rather than them trying to spin up a team themselves and enter the game. And I think that will be done strategically because the folks that have executed on this strategy are a far more profitable asset than just executing this strategy on their own. And I think what that will allow them to do is give that Bitcoin treasury team immediate access to the ability to raise much more capital because now they are owned by one of these big institutions that can raise capital better than anybody else. And that will basically allow them to get that acceleration and achieve that scale without having to build that team in-house and then potentially underperform these other companies.
So we've seen Blockstream now through Adam Back about to parlay their 15,000 or so Bitcoin into a Bitcoin treasury company. Now, there are other companies who have a similar amount of Bitcoin, if not more, laying dormant, for want of a better word, not really being put to use. It's just sitting on a balance sheet. And specifically, I'm talking about Bitcoin miners. Do you think there's a possibility for them to parlay their Bitcoin holdings into sort of a consolidated Bitcoin treasury entity and to help get something to scale? Because I don't think any of them have done that yet. But there's probably, 4 or 5 of them with a combined total well in excess of 100,000 Bitcoin, I'm guessing. I mean, I can't remember the last time I checked their balances. But, there's a considerable amount of Bitcoin sitting on their balance sheets collectively. And I just wonder what the hell they're going to do with it unless they're going to sell it at the bottom of the bear market again.
So I believe that the miners will not spin off the traditional sailor playbook and run this treasury strategy. Reason being, all of the capital raising ability, all of the scale that they've achieved needs to go into their mining operations. These are really high capex operations that are hugely reliant on their ability to raise capital cheaply. And so all of a sudden, if you take that ability to finance and take that ability to raise capital, and then you put it towards something that is not Bitcoin mining, that is not your cash flowing business, then all of a sudden you underperform as a miner, and then you put yourself at immense risk of having to shut down your operations. So I think that, and this is why I said so many times when I talk about an underlying core business as being low CapEx, right? Highly profitable, low CapEx company. That's why I don't think miners will adopt this playbook and speculatively attack the dollar, because they need all of that capital raising ability, the ability to finance all of their machines and all of their operations and strike deals for good real estate with good electricity prices. All of that needs to go to their mining operations. I don't think they will have the capacity beyond that to successfully execute on a playbook. And that's why you've seen players like Mara not really engage so much in the Sailor playbook. They dabbled in it. I think, time slips by in the Bitcoin industry. I can never remember dates, but it may have been sometime last year where they announced a big Bitcoin acquisition. And then beyond that, you don't really see them running the playbook. And I think that just comes down to their core business has needs for capital markets that really take up all of their ability to go and run this playbook. So I don't think miners will be doing this as much. And that's why I think it's important to distinguish between companies that hold Bitcoin on their balance sheet and companies that are running this playbook. I think companies that are running this playbook now have been able to do it successfully without having a low capex, having an underlying business beyond, just selling the common stock and creating preferred stocks and using that to accumulate Bitcoin. I don't think, and I think that beyond that, these companies will evolve to either acquire or build low capex businesses. But because mining is so capital intensive, I don't think those will be the folks that actively run this playbook. I think miners will stay miners, and the treasury companies that run this playbook will be an entirely different class of company.
So I don't think I asked my question in a very clear way. I wasn't asking whether or not Bitcoin miners would run the Bitcoin treasury playbook, but rather use their Bitcoin on their balance sheet, invest it in an entity, which would then become the Bitcoin treasury company itself, and the miner would continue being the Bitcoin miner. Right. So it would just take a stakeholding, use their Bitcoin to own some equity in a Bitcoin treasury company. Similar to what Blockstream is doing. They've got, 15, 20,000 Bitcoin. They're parlaying that in a new Bitcoin treasury company entity, and they will take a stakeholding in that by contributing their Bitcoin.
Right. I think that's going to happen. Sorry for misunderstanding the question. I got a bit.
No, it was my fault. I didn't ask it properly.
my massive Bitcoin sign fell over behind me. I'll have to fix that. But yeah, no, I think that's plausible. You've already seen it with Blockstream. You're probably going to see it with Marathon and a handful of these Bitcoin miners who do this very same thing. And it's really smart to essentially participate in that and spin it off into a separate entity rather than doing all of it in-house. I think that's plausible. Yeah. To answer your question in a much shorter fashion, I think that's plausible. I think you see more of that.